Welcome to The Deep Dive, the show where we slice through the market chatter and get you straight to the insights that truly matter.
Great to be here.
So today, we're kicking things off with a pretty compelling question, I think. What truly defines a leader in the comfort product space today? Is it just about making great mattresses, or is there, a deeper, more intricate dance happening between traditional manufacturing, cutting-edge digital stuff, and maybe a real commitment to social responsibility?
That's a vital question, absolutely, because it really challenges us, doesn't it, to look beyond just the balance sheet numbers
Right.
and consider the whole ecosystem a company operates in, how all those pieces fit together to create, well, sustained value.
Exactly, and that's precisely what we're going to try and explore today. We're unboxing the latest unaudited financial results for Q1 FY26 from Sheela Foam Ltd.
Okay.
This covers the quarter ending June 30, 2025. Now, Sheela Foam, for anyone maybe less familiar, is a big Indian multinational player in foam and mattress products.
A major name, yeah.
And their recent investor presentation, press release, financial statements, they're just packed with fascinating details. Oh, and a quick note for our global listeners. When you hear INR, we're talking Indian rupees, and a crore is 10 million.
Right, so 821 crore is 8,210 million rupees. Good context.
Exactly.
So our mission today really is to dig into all of that, try and unearth those crucial takeaways, maybe a few surprising facts too,
Hopefully.
to give you a really comprehensive understanding of their performance and where they might be headed strategically. We're drawing straight from the source materials, the investor deck, the press release, and those detailed financial results.
Okay, let's get into it. Let's unpack this with the big picture first.
Yeah.
Their overall consolidated performance. Sheela Foam reported consolidated revenue from operations hitting INR 821 crore in Q1 FY26.
Okay.
That's, well, it's a modest 1% year-over-year growth from INR 810 crore in Q1 FY25.
Yeah.
So revenue just saw a slight bump.
Right, just a slight bump on the top line.
Mm.
But, while that growth was modest, what truly stands out, I think, is the significant leap in their consolidated core EBITDA.
Ah, okay.
It surged by a really impressive 42% year over year, reached INR 85 crore in Q1 FY26, up from 60 crore in the same quarter last year.
Wow, 42%.
Yeah, and this translates directly into a really robust expansion of their consolidated core EBITDA margins. They jumped by 300 basis points.
3 percentage points.
Exactly, 3 percentage points, climbing to 10.4% from 7.4%. I mean, this isn't just about, trimming costs here and there. It feels like a masterclass in profitability optimization.
Squeezing more value out.
Precisely. Suggests a strategic focus on getting more from their existing operations.
That's a powerful move for profitability, definitely, especially with just that modest revenue increase. However, it's important we note that their reported consolidated profit after tax, or PT, came in at INR 7 crore. Now, this was notably lower than the normalized consolidated PT of INR 30 crore that was mentioned in the press release.
And that discrepancy is really crucial for understanding the true health of their core business, isn't it?
Yeah, explain that difference.
Well, the reported PAT was primarily hit by two, let's call them non-operational items. An INR 10 crore mark-to-market, or MTM, loss on Forex cover.
Okay, paper losses from currency stuff.
Basically, yeah.
Yeah.
Doesn't really affect their day-to-day mattress sales directly. And also an INR 12 crore loss on government bonds. So if you strip those out,
Right.
you get a much clearer picture of their underlying operational profitability. Just for context, their consolidated basic and diluted EPS for the quarter was INR 1.
Okay, so the core business seems to be performing much better than that headline PAT number might suggest once we account for those one-off hits.
Okay.
And speaking of core business drivers, I mean, the biggest headline, it seems, from their reports is unequivocally the success story of the Kurlon integration.
Oh, absolutely. What's fascinating here is how clearly the company attributes its strong performance to integrating Kurlon Enterprise Limited into Sheela Foam's India business.
It's not just a side note for them.
Not at all. It's cited as a major catalyst. And it really offers, I think, a compelling blueprint for how an established brand can leverage a strategic acquisition, not just for market share, but for deep operational synergy.
And a significant boost to core profitability.
Exactly. It seems like a textbook case done well.
That strategic move really seems to be setting a new standard for them.
Yeah.
This integration propelled their India business, which now includes Sheela Foam, Kurlon, and also Stocko,
Right, that tech arm.
to achieve its highest ever core EBITDA margin of 11.7% in Q1 FY26.
Highest ever, yeah. That's a significant jump, 331 basis points, or 3.31 percentage points, up from 8.4% in Q1 FY25.
Huge jump.
And the management commentary really unpacks why it's been so successful. Rahul Gautam, their executive chairman, he highlighted that Kurlon's integration optimized operating facilities.
Makes sense.
Significantly improved raw material purchasing efficiencies. That's huge in this business.
Volume buying power.
Exactly, and smartly reduced overhead and logistics costs, all while leveraging their existing channel network. So it's more than just combining two companies. It's about realizing, true economies of scale and operational excellence.
And looking ahead.
Well, the managing director, Tushar Gautam, expressed confidence in continued volume growth and improved core EBITDA. Especially, he noted, as we head into the festive season, building on structured efforts over the past 18 months or so.
Okay. One important accounting note, though, maybe for our listeners who track this closely.
Good point.
Is that the official scheme of amalgamation for Kurlon hasn't actually been fully accounted for in these financial results yet. It's due to pending statutory and regulatory approvals.
That is a key detail. It implies that the full financial impact of this integration, once all the approvals are finally through, could still be ahead, potentially offering even more upside.
Interesting. Okay. That India story is clearly one of, remarkable growth and strategic integration. But how does this translate across their different product segments, and maybe geographically? Let's dive a bit deeper into their India business performance. First, SFL, KEL, and Stocko combined.
Right. So overall, revenue grew a solid 5% to INR 644 crore.
Okay.
And core EBITDA, as we sort of touched on, surged by that impressive 47% to INR 75 crore.
Within India, what led the charge?
Definitely the mattress segment. It saw strong 10% year-over-year volume growth. That's over 813,000 units sold.
Wow.
And a 9% value growth to INR 300 crore. So robust demand in their core product category, really underscoring their market leadership there.
And here's something that really jumped out at me, especially for anyone watching digital trends.
I think it's e-commerce.
You got it. Their e-commerce sales registered a staggering 66% year-over-year growth.
66%. That's huge.
It's not just about selling more mattresses, right? It's such a powerful signal of market adaptation, shifting consumer behavior. It really suggests Sheela Foam is hitting a sweet spot in the online space.
Absolutely. And plus, their Tarang and Aram mattress range.
The mattress for every Indian one.
That's the one, aiming for that budget segment. It clocked a significant 59% year-over-year growth.
That's huge, too. Shows that strategy for budget-friendly, accessible offerings is really paying off.
It does. And beyond mattresses, their technical foam segment saw an 8% increase in volume, 3% value growth. Comfort foam volumes rose 9% with 2% value growth.
Okay.
Interestingly, furniture cushioning saw a bit of a dip, a 4% volume decline, though its value remained flat. So it's a diversified performance across the foam types, isn't it? Shows they're managing different market dynamics for various products.
Right, not putting all their eggs in one basket. Now, that's the thriving India story. But what about their international operations? Let's shift focus. Spain and Australia.
Okay.
Here, the picture is a bit different. Revenue actually decreased by 4% to INR 178 crore.
Yeah, that's a crucial observation about international. But despite that revenue dip in Spain and Australia,
Yes.
their core EBITDA actually increased by 22% to INR 11 crore.
Really? How?
While their margins improved by 130 basis points, that's a 1.3 percentage point improvement, hitting 6.2%.
So even with less revenue, they made more profit, relatively speaking.
Exactly. It suggests really effective cost management or perhaps a strategic shift in the product mix they're selling internationally, allowing them to extract more profit even from less revenue.
That shows resilience, doesn't it? Strategic discipline, even when facing headwinds.
It's an important sign, yeah. Adaptability.
Absolutely. So we've talked financials, segments, but how does a comfort products company actually reach its customers, especially in such a fragmented, diverse market like India?
Good question.
Sheela Foam is clearly making significant investments in its whole footprint, retail, channel, digital. They opened 234 new showrooms this quarter alone, bringing their total touchpoints to over 20,000 across India. And they mentioned a strategic focus on Tier 1 and Tier 2 cities.
And this physical expansion seems powerfully complemented by strong channel engagement, too. They held over 30 pan-India business meets, more than 10 dealer meets.
Getting FaceTime.
Yeah, interacting with over 6,000 retail partners
Yeah.
for both Sleepwell and Curl-On brands. That's crucial, isn't it, for fostering alignment, renewing trust across such a broad, vital network.
Definitely. And they're getting really innovative with their campaigns, it seems. That Did You Sleep Well? Strategic anchor.
Ah, yes, I saw that.
Saw widespread impact through WhatsApp circulation, apparently. Achieved over 100 million reach.
100 million.
Yeah, with more than 44% impressions and over 30% clicks. I mean, what does such impressive engagement on a simple, relatable campaign like that tell us about how they understand the consumer?
Well, that campaign feels like a bit of a masterstroke in brand resonance, doesn't it?
It does.
It taps into something universal, sleep, and transforms a simple question into this powerful, shareable engagement point. The massive reach suggests they really get how to connect emotionally with their audience, in a digital-first world, building trust, familiarity, beyond just product features.
Yeah, good point. Their digital presence is also clearly robust. Over 4,000 Google My Business profiles.
For discoverability, SEO, smart.
Right. And on social media, the numbers are equally compelling. The Sleep Well Mother's Day campaign got over 213 million impressions, more than 50% overall social engagement. Curl-On also saw huge reach, over 66 million impressions.
So it indicates a very effective multi-channel digital marketing strategy. It's genuinely cutting through the noise, it seems.
And they're not just pushing the same old stuff. The report highlighted new offerings like Champ Classic Ortho, Curl-A-Core Essential, Curl-On Teensy.
Catering to different needs, yeah. Ortho support, core, even stuff for teens.
Shows a commitment to continuous product innovation. Right?
Absolutely. Keeps things fresh.
So they're innovating on product, excelling at reaching customers. But, for a company that sells comfort, their definition seems to extend far beyond just the physical product.
That's very true.
It's actually quite commendable how Sheela Foam also deeply embeds sustainability and social impact into their core strategy.
Absolutely. Their Sustainability 2030 strategy, it's a very ambitious blueprint, really, for what it means to be a responsible leader in their space.
What are the pillars?
They've identified 4 key Sustainable Development Goals, SDGs, as pillars for the plan. On the environmental front, they're focused on things like air quality, PPE, low VOC products, and promoting wellness product innovation through sleep tech.
And their environmental targets seem quite ambitious. They aim to significantly boost solar energy adoption, targeting 11% for SFL solar by 2025 and an impressive 50% overall by 2030.
50%, that's huge.
And for waste management, they're not just aiming for reduction, they're targeting 15% reduction by 2025 and then an impressive 100% circularity with year-over-year intensity reduction by 2030.
100% circularity.
Yeah. They're even evaluating opportunities for waste mattress management, which is, let's face it, a massive challenge in this industry. What does that aggressive move towards circularity tell us about their long-term vision?
Well, that aggressive push towards circularity is highly significant, I think. It signals a company that views sustainability not just as a compliance checkbox,
Right.
but as a fundamental pillar of future competitiveness and brand value. For a comfort products company, tackling waste, especially bulky items like mattresses, directly enhances their brand's promise of well-being. It extends it to planetary health.
It's a strategic investment, then.
In long-term resilience and consumer trust, absolutely.
That's a powerful statement of intent. Okay, what about the social and governance side?
Well, they're making solid progress there, too, signing off and launching LMS modules for POSH and their code of conduct. A human rights module is coming soon, they said. They're also actively working to improve gender diversity, employee diversity up to 8.64%, worker diversity 4.87%, and inclusivity for persons with disabilities growing from 1 to 6 individuals. Small steps, but important ones.
Definitely.
They're also extending their ESG principles outwards, engaging 45 suppliers and, interestingly, 100% of their channel partners in sensitization efforts.
Taking the whole chain with them.
Trying to, yes. And here's a direct, tangible impact on the customer experience. A significant reduction in consumer complaint resolution time, cut from 35 days down to 18 days.
Wow, that's halved it almost.
With an ambitious target of 15 days. That's a clear, measurable commitment to customer centricity, isn't it? And operational efficiency.
It certainly is. And for broader social impact, they highlighted Zindaji with Richa.
Ah, yes, the Sleepwell Foundation platform.
Exactly. Designed for stories that heal, inspire, connect. Apparently, this initiative crossed a massive milestone. 5 crore views. That's 50 million views.
That's huge reach for a foundation initiative.
It really is. It's a compelling example of how a brand can genuinely connect to emotional wellness and community well-being, going far beyond just the physical product itself.
Yeah, definitely broadens the definition of comfort. Okay, moving to their overall financial health, maybe. The consolidated balance sheet metrics offer a clear picture of their stability.
Lay it out for us.
Net worth stands at INR 3,128.49 crore. They have INR 543.75 crore in outstanding unsecured non-convertible debentures, and their debt-to-equity ratio is 0.45.
Which is generally considered quite healthy, manageable.
Quite manageable, yes. Their current ratio stands at 0.80, and for those interested in the nitty-gritty, a NIL certificate for security cover regarding those unsecured debentures was submitted.
Standard disclosure, basically confirming no specific collateral tied to those bonds.
Exactly. Beyond the standard numbers, there are maybe a few key accounting and corporate developments worth just briefly noting.
Yep.
In Q4 of the last fiscal year, so FY25, Sheela Foam acquired an additional stake in House of Kiraya Ltd, that's Furlenco.
Ah, the furniture rental company.
Right. Increasing its equity stake from about 17.7% up to 43.89%, though it continues to be traded as a jointly controlled entity, meaning they share control.
Okay. Interesting strategic investment there.
It's also worth highlighting, perhaps, that past losses from those fire outbreaks
Right. Silvassa and Chagadia plants.
were subsequently recovered from insurance companies, specifically INR 10.95 crore in losses from Silvassa and INR 18.71 crore from Chagadia were recouped.
Important for historical context and shows effective risk management through insurance.
Precisely. And finally, just a small note, they mentioned the allotment of about 4,782 equity shares to eligible employees who exercised stock options under their ESOP plan from 2022.
Standard practice for employee incentives.
Okay. So, if we try and distill the most impactful insights from this whole deep dive,
Let's try.
the successful Kurlon integration is, well, undeniably a major driver for growth, for boosted profitability in their India business. It really sets a blueprint for strategic acquisitions.
Agreed.
Then there's the impressive e-commerce performance. Demonstrates strong digital prowess, market adaptation. Signals a significant shift in how comfort products are sold and consumed.
Definitely a key takeaway.
And perhaps most compellingly, I think, is the company's clear, actionable commitment to sustainability and social initiatives. It positions them as a really forward-thinking entity, doesn't it? Redefining what comfort truly means in the 21st century.
That's a great summary. And this leads us perfectly, I think, to a provocative thought for you, our listener, to maybe mull over as you go about your day.
Okay.
Sheela Foam's Q1 FY26 results reveal a company not only focused on financial metrics, but deeply invested in social and environmental initiatives. From achieving 100% waste circularity by 2030 to fostering emotional wellness through its foundation. So what does it mean for a comfort company to truly deliver comfort in the 21st century, when it seems to encompass not just physical well-being through products, but also environmental stewardship and community impact? How might these broader commitments shape its competitive edge and maybe the future definition of its brand in a world that increasingly values purpose alongside profit?
Something to think about.
Definitely something to think about.